Yeah, and you're going to get lower prints because of the volume right there in the equity. You were told it in pre-market, were you not?
Right.
So that's part of the risk management plan, is it not? You got 58,000 shares, but out of that 58,000 shares, he's not in the positive territory. You were above that 592.50 that Mario kept harping about Friday. That was your breakout zone. That was your support level. And then you went up $7 off the bottom on Friday. And right now, it appears to me that the calls are holding, but because of the volume on the equity, you're not going to see much over here. That's why I was telling you in pre-market. Yeah, they'll hold their price based on this print area. Their bid and their ask zones, 750 being the low, and the high, that's not the real range. But let's see what that equity does as far as the equity goes. We're talking about the range here. We're talking about that low, 37 contracts traded. You can see right here and right now, we're live on that opening bell, and it looks like it. Wow, 1, 2, 3, 4, 5 teenies is what I said in pre-market. The qualifier's been met live. Here you are now up $1.19 in that opening bell 3-minute price action bar, coming right back to the resistance level right there. And the contracts peaked here. They brought that put side down over here on that 590, which is in the money. That 590 puts in the money, 1111 right there. Plus, over here you got the 595 put. That's marked down to 580 now. 740 was the close. This is on the put side now. The put side, that 600, look at that. 9.7, they marked it down. So they did mark that down as they had that wonderful, wonderful opening bell automatic qualifier. This is a qualifier. This is what we talk about in your apprenticeship day after day, week after week, weekend after weekend. And there's that low diamond right across here. Here is the resistance area on the opening bell. That's why the contracts over here, your calls are 850 where my pointer is. Now they're 850 by 880, 30-cent spread. Why is because you only have 103,000 shares traded on Google, MMT. And the reason why you don't see a lot of action over here right on the opening was there was bids down there at around
we are going higher.
660. Well, yeah, you are at 92. And the 3-minute bar, and there it is. That's the 3-minute bar, Tina. And that's how the options. Now watch that put side. Based on that 3-minute breakout, watch how low the 590 put goes. Watch. Watch how low the 595 goes. 715 there, 570. Watch this market here. Watch these markets here. $600 put. Watch where the high. They took $2 premium out. If they start to hold support, then that means that the equity is reversing in your platform.
91, not yet. 85.
Well, here it is. That's your distribution bar. That was a huge 1, 2, 3, 4, 5, 6, 7 teenies up. But look at 1, 2, 3, 4 teenies right back down. So that's 11 teeny breakout and 4 teenies. That's 11 teenies times what? I got 46 cents a teeny.
It's holding the half bar.
598.75 is a high and 593 is a low. And there's your breakout resistance. If this doesn't stay at high levels, your ratio was 0.36. It's dropped to 12. That means that bar has come down and tested that support level, and we've been open 7 minutes between the buyer and the seller with very low volume on Google, and the option prices are going to move differently because of the volume here. The real markets
like 97,
here,
98.
The real markets have not
been 25. Made.
The real markets have not been made.
Mm-hmm.
Because this teeny line right here on that opening bell, you got to get back above the 2 prior diamond highs, Tina. And if you do, the contracts will go to $10.50 on the calls when you get above these 2 diamonds. And we have this video here live right now. But you're pulling back 597.01 to 598.75. So that ratio pullback has given this put side support. All right? And you found out right here that the put side is the low is 450 and the prints are still below the put side. That's because this support level has to hold. Where it broke through that resistance and you have a 1, 2, 3, 4 teeny within milliseconds down times 46 cents a teeny, that's a robot. And they sold the bid down. The trick now is that this bid has to rise in price and they have to print on this side of the market.
We broke the half bar.
There it goes.
56.
Puts are put in the bottom right now. 6 by 630 by 670. This is live. It's on the opening bell. Remember, this side of the transaction has not come to our price target. And we're looking at 650 and 5.7. 5.7 has the least amount of risk. If Google doesn't come back throughout the trading day and set itself back up and go right back up in volatility. And what is it? It's high frequency volume computing machines that are involved between the buyer and the seller versus the public transaction. And this is how they work. And they work with qualifiers. They're within milliseconds up, milliseconds down. And as I've always taught MMTs, the qualifier is you must have this immediate buy bar that has to go higher at the price print here. This bar here needs to be the big, powerful comeback bar. So yeah, you have that teeny down, you have that teeny up, but this one here counts. You got to go back up 4 teenies. No, the same amount. 1, 2, 3, 4, 5.
Apple 10, price line 70.
Watch the ratio here. It's at 78.
Yep.
So things are getting tighter. That the put side still at risk.
Yeah, the put side doesn't make money. The 600 doesn't make money.
Well, no, you're only now. If you don't go above 75, that put will have a low end. You want to bet me?
Yeah.
But if you go above 75, the put will come down in value.
That's
and
right.
the qualifier on the opening bell,
78.
this green bar has got to be milliseconds back up, just as it was down in the electronic communication network with high frequency volume computing machines versus the non-human reaction in the buy and sell tape. And that's a 3 minute, 6 minute, 9 minute, 12 minute opening bell here and now. And watch the price prints, watch the 595 call, and watch how the puts are getting lower. That's based on that bar coming up. But I can tell you the next bar, you got to take out these highs. And this bar here does not qualify. It's got to be as big as this bar, whether it comes in 1 bar or 2. This diamond right here, the body of the print needs to get above these diamonds in order for this to go higher. Watch the put side. Watch 78. It's above 75. This can't go toward 15. No. That means they sold down the bid. Because they did. If you look at the price prints. See, 57
Diamond stays
All
still
right.
on the put side.
Now watch the green bar. Watch the print. 23 went off, 76s. So they printed the bid down. Now they have to print this side of the market. That's live. That's here. That's now. That's a 12-minute price action bar. And you need to see the math here, rise in value. The bid must rise in value, and they buy this side of the transaction to keep that move moving.